Good evening, everybody. Sorry for the delay. Just kind of I don't want to say normal market trend, but it is somewhat like a normal market trend, other than the fact that it's lasted for 15 months now. But the power or the strength of this market is based upon the fact that in an uptrend, we're having down days. Where they're not taking it straight up exuberantly, they're buying and selling along the way. So that means there's a lot of good strong rotation. All we have to do is keep analyzing which areas are getting maintaining the strength, or which areas are selling off the hardest. So as we can see, the NASDAQ off about 40 points today, but we're still right here on the 3T line. So just the basic fact that if we're still above the T line, or if we're still above the 3T line, let alone the T line, pretty much tells us that the investor sentiment is still positive. There hasn't been any major change. Crude oil, surprisingly, still in this upward trend, staying above the T line also. And gold, backed off today. It's trading a little bit lower now, so that's what's making things like Nugget starting to back off. So with the fact that you have kind of a bearish doji sandwich after a big left-right combo, and the other telling factor, and this is kind of some of the things we were trying to indicate, that if you can see where there's an obvious resistance level and you see a sell signal, that becomes your major criteria. And you have to calculate, all right, maybe it's not so much if you're in the overbought or oversold, you are seeing a sell signal at a relevant level. Oh, now I got these things to contend with. It's humbug. And the dollar, which was in the news this past week, it still hasn't turned around. They were talking about it on this day, and it reversed and came back up, and everybody was worried that they were trying to make the dollar go down so the economy would be stronger, when it was just kind of an illustration, I guess, from some motion that a weak dollar is stronger for the U.S. All right, so right now, observing some of the obvious, you can see where this breakout was today on edit. This is why it's always good to kind of analyze, or at least have on your watch list, charts that you might think are getting ready. Because two things happen when they confirm a breakout. One, we know the probabilities are they're going to move in the right direction. Two, you always have the potential of a big price move, because everybody else that may not be necessarily using candlesticks, just bar charts, see that it's breaking out through this level and they start piling in. True, yeah, but that's the advantage we have, is we can analyze a lot better, with a lot more accuracy, which sectors or where the money is coming to. Jamie, that's true. So, let's see. All right, let me get back on track here. We can also see right now in, make this smaller, overstock. It looked like it was maintaining an uptrend. Still kind of maintaining this uptrend. Also maintaining this downtrend. So if you were out here, which you should have been, because that told you they weren't breaking out, you didn't know whether they were heading this way. But right now you can see what's happening. Got a wedge formation. So where's your high probability trade setup? If they can break out above this downward channel, or they break down through that lower channel. And let's see, I should have had this over in the other spot where we could pretty much see that here was our breakout area. And if it opened positive today, what did we have? Well, very clearly we had a J-hook pattern that was kind of using the 50-day moving average and the T-line as support, and this was our resistance level. If it opened positive, what was it telling us? That they weren't going to resist at the resistance level anymore. That our J-hook pattern probably was going to take us up quite a bit. This is why we put this as an option trade this morning. If it opened positive today, you wanted to be buying. So the nice thing, again, that we have based upon human nature is identifying what's happening at important technical levels. This is our SGRY. If you were in this and you took profits, or you took profits here, now get ready for the next analysis. What do we got setting up on positive trading? A J-hook pattern. And what's the evidence that this might be a J-hook pattern? Because we can observe that the doji hammer all occurring right here on the 200. Now they told us which way they wanted to take it. That becomes an extremely strong setup, especially if it opens positive. And NTLA, kind of the same scenario. It broke out Friday with kind of a bullish flutter kicker. So if it opened positive today, what was it telling us? Well, we've come out of this fry pan bottom going into new territory. So this is what we want to use as our visuals. When is the pattern breaking out? When the pattern breaks out, that usually tells us we're going to be going into more upside potential. With not more upside potential, but a high degree, high probability trade setup. Now, are some of these going to skyrocket? We don't know that. What we do know, though, is that we're probably going to be in the right trade at the right time. And 8, same scenario. There was our fry pan bottom. There's our J-hook. And why were we prepared for a J-hook, or why would we suspect a J-hook? Because look where our bullish harami, right smack dab on the T-line, and then gap up. What do we expect from here? A wave 1 and a wave 3. So this is why I try to reiterate over and over. I guess that is what reiterating is. That you want to buy the patterns based upon the signals and the levels that everybody else is watching. But you want to be buying when there becomes a new dynamic in the price move. Oh, our BHVN. Out of our cradle pattern down here. So what did we have? We had kind of a nice steady uptrend, consolidation. And where did the consolidation, what did they do right after the consolidation? We pretty much brought it right back up into that trend channel. So now what do we got? we've got a trend that as long as it stays above the T line, we stay long. CRK. I know the same scenario. There's our breakout on a doji sandwich. If you were ready to buy this today, you wanted to see positive trading, which we really didn't get. So what's our entry strategy at this point? It comes back up through the high of today. What's that indicating? One, it's telling us there's still upside after our bullish doji sandwich that broke out of this kind of fry pan bottom, and then right down to the daily analysis. What's our doji rule? They're going to move it in the direction of how they open it after a doji. So we can constantly put in analysis that just increases our probabilities, knowing what should happen after a price move. Now, WABA should have broken out today, but it didn't. So what's our last criteria? That a fry pan bottom, you can stay long as it doesn't close below the T line. So to stay long in WABA, which this was one of our option trades, what do we need to see? We need to see it open positive and probably trade positive, staying above the T line. SSW, this is pretty much telling us what we should be expecting. We're in the overbought area. We kind of had a scoop pattern breakout. But we can see right here about this resistance level, what did we have happening? More of an evening star signal. So what did that tell us about our probabilities? Notice we probably aren't breaking out. So if we were long, now what should our trading strategy be? It better open and trade positive tomorrow, staying above the T line. If it trades lower, you close out immediately, because that tells you the sell signal came in right at a level that looks like they've topped it out. It's time to move out and move on to something else. Okay, so now we got some of the biggies like Labu. When it broke out on this gap up, what do we got going? A 45 degree. Oh, so this is kind of a segue into this past weekend we had our 4-hour training on how to trade and get prepared for entering trades and where to set your stop losses, but more oriented toward what you should be prepared for even before you start your first trading. So I say 4-hour session kind of as a joke, because I guess we went over a little bit over 7 hours. We've got another trading program going to be set up for the end of February, I think February 24th, and this is going to be oriented toward probably about 8 or 9 trading strategies that you can utilize using candlestick signals and patterns. And the reason we're doing that is quite often, and you've probably seen some of the comments in here every now and then, with so many setups, how do you know which one to take? So the answer to that is, and in the process of, if you're somebody that's still just learning candlesticks and the psychology behind it, maybe you don't want to be looking at every single chart or every good pattern. But if you can perfect maybe 2 or 3 different trading strategies, what does that do to your portfolio? That puts you in situations where, all right, maybe it's not a blast-off move in some of your stocks, but there's steady eddy uptrends, and then hopefully with some of the ones that you're moving around, you catch a big move. But what most people have a problem with is learning to find a trading strategy that they can become a master of, instead of kind of being a jack of all trades. You know, that's what we were kind of discussing over the weekend, was there's a lot of people that jump from one trading strategy to another because one strategy doesn't work for them, so they move on to something else. That one doesn't work for them, they move on to something else. The reason I stuck with candlesticks for so long is I knew they worked, or they wouldn't be around. So then it was just a process of which signals or patterns or strategies do I want to use and become real good at. And when I say that is I've got trades that are based upon seeing a pattern, seeing it break out, and just hanging with it until it's time to sell. So, and there were times when I would jump back and forth. Even when there'll be times that you'll hear me say that even when I do the training, I remember a trading pattern that I'd forgotten about. But it's not that I'd forgotten about it and moved away from it intentionally or unintentionally. I just haven't used it because I know it's good, but I've got other trading strategies that I know work extremely well. So I want to kind of concentrate on them. When there's markets, there's going to be times when one trading strategy is working well for the next 4 months, all of a sudden kind of dissipates, and always got another trading strategy that I can go to. So I don't have to learn all 8 strategies. All I have to do is learn the 2 or 3 that are going to be the best for me. So I can concentrate on those and become real good at those. Netflix, kind of the same scenario. We knew what should happen on a gap up. That we better see positive trading the next day. Now what do we got? A 45 degree essentially in progress. Amazon, we kept projecting when we were buying calls right in here that we kind of suspected where our target should be, which is, keep that up. Our target would be right about there. And why is that important? First of all, your target is a function of whether this is a worthwhile trade or not. In this case, it was. Secondly, when it does get to a target that you know everybody else is watching, you can start thinking about or start watching a little bit more diligently to see what's happening there. So this makes a perfect example. Right now we've got a sell stop to close out positions if it trades back below today's low. Why is that? Because if we observe the obvious, we're in the overbought area. We've had a nice move up. We've just touched what we can perceive to be a resistance level. And if it had come up here and closed at the high end of the range, telling us, all right, we've got a good, strong move, kind of done a spinning top, a little bit indecisive. So even though it was up 15, 16 points today, it's telling us it was kind of mid-range. That's also giving us a warning that if it comes back down through today's low, it's time to take profits. Yeah, moving a little bit away from the T-line. So visually, we can analyze what's happening in investor sentiment and whether we should be a lot more tighter on our stops. Apple, up until basically this day right here. Let's see if I can draw this line. And we could pretty much see there was kind of a parallel channel here, and that channel was equating right to the 50. When it came down through the 50 the other day, that would have been Thursday. What did that tell us about our channel? It's not working. What it tells us about our support at the 50? Not working. What did this day tell us? Well, maybe this area was going to act as support. So what was our guess from that point? If it had opened positive today and you were short or in the puts, you would have covered that. So you normally place a stop at the previous day's low. Michael, on a doji, remember our simple rule of the doji. they're going to move it in the direction of how they open after a doji. So if I'm up here in the overbought area and it's in a trend, where's my safest place to say the sellers have taken control? Well, if they came back down through the low of that doji in the overbought area, what would that represent? Or what would that illustrate? That the sellers were taking control after a doji in the overbought area, and we know what our basic rule is. You see a doji in the overbought area, and they start selling off, take your profits. So it just gives us a good visual spot. Now, let's see if I've got one. Here's another one. Now, that was the same scenario. But sometimes, if they've moved it way up and then they gap it down or lower it open the next day, you take half the position off and then maybe the other half at the low. But it gives you a format of when to close out positions. Generally, do you place closing stops for options? No, not on the option price. What you can do is you put in a contingency order. And let's say it opened here today and started trading up a little bit. You might say, all right, if it comes up through, can't see these numbers, but if it comes up to 170 through 172.30, close out my option trade. So you put a contingency order in that says if the stock price hits a certain level, then close out the option trade. NVIDIA, still coming out of this big fry pan bottom type pattern. And what's our criteria? What's the most simple criteria that we've got? You stay long until you see a sell signal and a close back below the T line. We did Nugget and Tesla. Observe the obvious. Make this a little bit smaller. Here's this kind of simple criteria. Let me make this smaller yet. Visually, it doesn't take too much to see. All right, here's kind of your trend at the top. And here's kind of your trend at the bottom, almost parallel. So what happened when they got up to the top of this trend channel? Next day they opened pretty much right on this trend line. I mean, you could move it around to where it would be exact, but it's telling you they opened and immediately started selling off. What was the implication? You're in the overbought area. You had a shooting star, a gap up, and immediately started selling off. What was that telling you about a breakout through this level? It wasn't happening. So you can take profits. So if you're in a trend channel, where's your next likely move? Back to the bottom of the trend channel. Except, notice what happened when we get right here at another major support level, the 200. Got a hammer harami, bullish left-right combo. What's that kind of imply? That this uptrend, they're not selling off. So now maybe we have a J-hook pattern, and what would that imply? That the strength of this move right here and the lack of strength on this move, like right here, that brought you all the way back down, isn't there. So now you've got a J-hook pattern that told us if this is wave 1, wave 3 is an implication that if they start taking it back up, this time they will break through that downtrending channel. Do you set stops on options based on stock prices or option prices? On the stock price. Remember, MP, you're buying an option, which is nothing more than another method for buying the stock. So you weren't buying the option prices because of option price moves. You were buying the options because of the stock price move. And when the stock price move starts going against what you anticipated that was going to be bullish, then you close out your trade, whether it's stocks or options. With a wedge like Overstock, have you noticed breakout is weaker if the wedge ran out of room rather than a breakout occurring maybe 3/4. No. If this is your wedge, no, you just watch to see what everybody else is watching. The people that are technical analysts, that it could waffle in here right out to the point, or if it waffled for a few days, you're waiting to see which way it's breaking out. Remember what this is doing. This is kind of compressing investor sentiment until it lasts one way or the other. Nugget, it doesn't look good right now. It looks, well, not look good. It just looks bearish because of your. Right now, we're seeing selling in the gold prices, and you've got kind of a bearish doji sandwich. But they resisted up here. I would suspect on any weakness, they're taking it down to the 50. That would mean you would have to use a market order stop. Yes, that's the disadvantage, that if you aren't sitting here and you see a stock go back through the level that you want to be out of the trade, if you had set a contingency order that said, all right, if a stock came back down and hit 50, sell my options. Well, the bid may be $2.20 and the ask may be $2.80, and normally you might put try to get out of your position at $2.50, about halfway in between. But if you're not sitting there and you say, all right, if it hits 50, sell my options, they may just slam you on the bid side. All right, everybody, hold on to your individual requests until we get done. When I tell Jim to do the double line, that's when you can start coming in, or that's when you put your requests in. This one's got a good-looking chart, even though it isn't very old. But right about here, where I guess they had the new offering, you can see it consolidated and then did a J-hook. So if you're long on this one, you can stay long. DTX. Fry pan bottom, and where did it break out? Right there. Well, the fry pan bottom started, and what did that correlate with? Your 200-day moving average. So if you're long, you stay long on this one. What's your expected move? This type of move, this type of move. So you got to watch, getting pretty close, getting up to that the high level, or the equivalent level of wave 3. Ticker signal on Ballard Power. Now Ballard Power jumps around. It does this. It'll go dead for months at a time, and then bam, all of a sudden it gets wild and whipsawing. But you do have a kicker signal, so you can try trade this. I would be more apt to be trading it off my 10-minute chart. You've got a big fry pan on UVXY. And where did it break out today? With your little best friend, gap up through the 34 and the 50. You can be buying this one on positive trading. Now, if it opens lower, starts trading lower, what's that tell you about your fry pan? It didn't break out. You close out the position and wait for the next buy signal. SNDX, there's your bobble breakout. And where did that bobble breakout come from? You can see the big fry pan bottom. So you stay long on this one. You're not up in the overbought area. So if this is kind of wave 1, look for wave 3 to be up another 3-4 points. Oh, we did ICPT. We recommended that today also because of the breakout with a J-hook pattern. Where's your next possible target? Lots of running room up here, possibly all the way up to the 200-day moving average. LSCC, another one that's showing a lot of strength. Why is that? You can see it kind of broke out through this level. And notice what it did today. After a nice strong signal on Friday, they opened it right back down here and took it right back up again. So, oh, Bill, you don't know what a bubble breakout is? I'll find one for you. They took it right back up again. What's that tell you? The bulls are still there. This looks like a J-hook pattern in the making. And IOVA, this is the example of why you want to buy the breakouts. Look how it broke out through this level and what usually happens on a breakout? It's usually a big move or a gap up. That tells you a new dynamic has come into the stock. It's more than likely going to give you a strong price move. That's all right, Bill. I make sure everybody knows what they should be looking for. Another fry pan bottom in Babcock and Wilcox. You're right here at kind of a good breakout level. I'd be buying this one on Positive Trading. Massey, this is kind of your bobble breakout. Now, usually it has a stronger trend, but notice what happened when it got up here. As soon as it hit the resistance level, you got a bearish engulfing. Pulls back. Usually it pulls back to the T-line, but the second time it comes up through here, it broke out. So this is kind of your bobble breakout where they hit here, they bobble around. That's not quite a bobble breakout. That's more resistance and coming back to the bottom of the channel. But a bobble breakout is basically they hit a resistance level, and then it's a J-hook pattern. Let's see. I know I've got a good bobble breakout. This is going to be one of the things that we can look at when we do our trading strategies. When you see a big move like this, but notice how it sold off, not good. But what we got to remember is this is a big gap up. There's a whole change of investor sentiment. So what do we want to watch here? We want to watch to see when the profit taking's over. That is pretty much the opposite. I don't know where I am. The X of this move. Your best friend move. Big gap up. Now we look for Positive Trading from here to see about a 45 degree. Nice little J-hook pattern coming out of this big rounding bottom. This is kind of your bobble pattern, Bill. Notice how when they brought this up and they failed, they pulled right back to the T-line. Then notice what happened. What they did there. They did kind of your J-hook pattern. But where was it more defined? You could see where the resistance level was, the 200. If you took out the 200, you'd still have a J-hook pattern. It's just now it becomes much more easy to identify. Oh, we've got it. Darn. We had a very nice bobble breakout that we were sitting in right now. I can't remember which one it was. Oops. That wasn't it. I'll find it. Good KEM. Harmony is somewhat of a bobble pattern. Came up, broke out, pulled back right to the T-line and the 34 and coming back up. Now if it opens positive, you definitely want to be a buyer. It's got kind of a J-hook pattern right here at the 50. And Another J-hook pattern in the making on Fate. Stay long on this one. Watt. Oh, just showing this as an illustration of something that hasn't occurred yet. So you had kind of a kicker signal, but we never qualified, or not qualified, confirmed. So you still don't want to be in this one. And that's just to give you an illustration. There are some charts you don't want to be in because they aren't going anywhere. There's your big morning star signal. Is it relevant? Number one, it's in the oversold area. And number two, it's occurring right smack dab off the 200. So what's our criteria now? What's a very safe trade? If it opens positive tomorrow, it's confirming our Morningstar signal and also telling us that our T-line's not acting as resistance anymore. And okay. AMRS. I had something to illustrate here, but I think it was just kind of your steady Eddie. Again, coming out of that fry pan bottom, breaking out. Oops. Is it about what? It is about what? It is about what? And please elaborate the point, not to confirm just now. I missed it. Well, what do you want to see on a buy signal? You want to see bullish confirmation. What's our bullish confirmation on this little kicker signal? That it opens positive and trades positive, one, and number two, comes up through the T-line. Break on a bottle of tequila, all right? See that? This is kind of your bobble breakout. It's more exaggerated, but you can see the fry pan bottom. You see they came up through the 200, and then they failed. Where'd they come back to? Right smack right smack dab to the T-line. And then a bullish Harami. What'd that tell us? The selling has stopped. When it came up through if you had closed out somewhere in here, you could be buying back because it was telling us the bobble breakout was occurring. That's the bobble speak, that's right. And Fran, this one's got a little slow curve J-hook. Where's your next likely target? Up here to the 50. This is your bobble. Bullish engulfing right off the 200. Where's your next target? The 50. What happened at the 50? A bearish engulfing. Time to take profits. Where did it move to? Right back to the T-line. Did a hammer and bullish confirmation. So now what happens? If this opens positive, you've got a J-hook pattern right here at the 50. That's your bobble breakout. That becomes an extremely high probability trade setup. And Tiva, you can see that one's setting up. You've got a bullish, so you can go after it aggressively and be buying it on the basis that you expect it to go to the 200, and then if it gets through the 200, you can be buying on that breakout. Okay, I've got a few more, but we got to hold on for a second. Smoke them if you got them. Give me 1 minute. You've got a technical difficulty. I don't know what's happening to my computer. Might just be getting old. Okay. On the short side, didn't get into this one, but you could see where this started with those big, long-legged tweezers and a bearish engulfing on Riot. That kind of started your downtrend. Now, one of the things that, I might be getting old myself. And I need more memory myself. But there was your obvious reversal. Now, there's your obvious, if you decided to go short, there's your obvious selling that has never come back up above the T-line. ACIA, kind of the same scenario. There's your evening star signal. And where did it occur? Right here at the T-line, the 50. What happened after your evening star signal? A bearish doji sandwich. So, we haven't come up with a name. It would be the opposite of a McMuffin, where you have a morning star doji sandwich. Now you have an evening star sandwich. I don't know what that would be. Hot pastrami. Is that what you usually have late at night? But observe the obvious. Where did this all occur? Right here at the 50. Where did the last sell signal occur? Right smack dab off the 50. We recommended going short on THS, but it didn't execute. It opened and immediately started trading positive. But notice where it failed to move past today. Right here at the 50. So if it opens lower tomorrow, you've still got this breakdown, and you're not quite in the oversold area. I'd still be ready to go short on this one as long as it stays below the T-line, and especially if it stays below the 50. This one looked good, but I realized the volume wasn't very big on this. That's the problem with some of these stocks. Well, this had 150,000 shares traded in it, which is probably good for the price of the stock. But there's a lot of times where if you see a good short, but it only trades 180,000 shares a day, you might not be able to get stock to short against. I don't think, Bob, it's setting up a piercing signal yet on THS. It didn't get above the halfway point. And your stochastics aren't in the oversold area, so I'd still be a little bit suspicious. CCJ. So there's your left-right combo. And there's your kind of your let's see. Kind of your channel breakdown. So how big a magnitude of move could this be? This move right here, this move right here, down into the maybe the $8 range. And DVAX. This is where you observe the obvious again. What do we have right here at the 50? A bearish engulfing signal. This is one of the things we are pointing out this weekend. Is right now, what is your overall trend? It's obviously down. Where do the people sell? When it hits a resistance level. Where was our sell signal? Right here on the 50. Where's our best place to go short on weakness tomorrow? Where would that likely take you? Could take you all the way back down to the 200 or even below. Just for the bottom of this trend channel. Thank you, John. Is this a blue ice failure? No. A blue ice failure is when they first fall through the ice, they come up and fail. This is just a failure at the 50. Now, had this come from here, or let's say this had come from here, down, that would be a blue ice failure. But the implication is the same. If you're selling, seeing a sell signal every time it hits a major resistance level, it's probably heading down to the next price level, or the next support level. Okay, that's about all we got for tonight. Is there any general questions I can answer on candlesticks? When can one expect a 45-degree? Usually after a big price move. Usually after a big price move, you expect a 45-degree. Comment on hammers with super long shadows. That's basically telling you there's a dramatic change of investor sentiment. That's the exact reason why we recognize those signals. I'm trying to think of where there was one. Oh. We had one. MATX. No. Can't remember which one it was, but there was one that had a hammer signal that took you all the way down to these are small hammer signals. What would be your recommendation for new members when going to live room? You'll find that there's a few people in here like Trader Abe and Gary C. that come up with good patterns. So, get two benefits. First of all, you're going to have a good supply of stocks because everybody in the room is looking for good buy pattern setups. And then secondly, if you're learning, it's a good place to ask questions, whether it's on a candlestick pattern or signal specifically, or whether you want to know which trading softwares or which scanning software is the best. You get a lot of feedback in here. I don't think Riot had the shooting stars way up here. So again, the illustration is the bigger these signals are, the more compelling there's been a change of investor sentiment. Jason, that's why I'd rather be a little bit late and buy into the breakout than trying to anticipate, because if you're trying to anticipate, that means you're buying as it's coming up to the resistance level that you're anticipating the breakout. The problem is everybody else can see that that's a resistance level, and that's maybe where they're going to be selling. So I would rather be a little bit late, knowing that my probabilities are very strong that it's already proven that it's breaking out. Because I'm not trying to buy at the absolute bottom or the best price. I'm trying to get that fat profit, high probability trade. Does a reverse of blue ice? Well, yeah, the opposite of a blue ice is shoves butts. I'm trying to think of. Well, this is not quite, but it's. Notice where our bullish kicker signal happened on blue, right smack dab off the 50. So it's definitely shown as support. Ned, you can either use Metastock or TC2000. Where do I find the T-line? T-line is just merely the exponential moving average. You put on that on your chart, just like you would any other moving average. We call it the T-line because it's the trigger line. Very simple. If you see a buy signal and a close above the T-line, you can stay long until you see a sell signal and a close back below the T-line. The T-line acts kind of like a Fibonacci support level. The other moving averages, everybody's watching those because they're on everybody's charts. There very, very few people have the T-line. So it doesn't act like a magnet because nobody has it. The big ones act like a magnet. So when the T-line works very effectively, it's basically kind of a natural support and resistance level of human nature. Okay, I guess with that, Jim, go ahead and do the double line. And in 2.8 seconds, do the next double line. JDST. There's kind of your doji sandwich. You can be buying this one. If it opens positive, just watch to see what it does once it gets to the 50. HollyFrontier, stay short. This is a perfect example of where you can stay long as it stays above the T-line, and you get ready to close it out if you see a sell signal and a close back below the T-line. Right now you can stay short. Same scenario on this one. Doji, bearish doji sandwich. These are the type that you can get into that you might be in a free fall, so you can short those. Alaska Air. Where do most people sell? This is kind of that clear indication of common sense that the Japanese race traders apply to their charts. Where do most people sell? They usually panic sell at the bottom. So if you see a gap down, especially in the oversold area, get ready to start watching for a buy signal. If I was short here, where was a logical place to cover your short position? If it came back up through that doji. Why? Because we had a gap down in the oversold area and we had a doji. Where's your what's your first target? Seeing what happens if you come back up to the T-line. Bristol Myers, not a very big money maker, but right now, if you're in a slow uptrend, you just stay with it as long as it stays above the T-line. Eli Lilly, same scenario. You're not going to make a big amount of money with it, but it's right now heading in the right direction. Just stay with it. And FPRX, nothing of any great consequence yet. You do have a piercing signal, but you're still trading indecisively in here. I'd want to see it break out, which in this case would tell you you'd probably want to break out through the 50. Yes, didn't read far enough, John. Yes, wait for it to come up through the 50 to get more confirmation the bulls have taken control. Another doji in the oversold area. If you're short on this one, just put your stop at above today's high. It shouldn't come up through that level. ICHR. Nothing of great magnitude here, except you do have the gap up. You're still above the T-line. If you're long, you stay long. You use the T-line as your stop. If you're looking to buy, you put a buy stop up here, because that will tell you your J-hook pattern is breaking out. Disney, nothing that you'd want to be in right now. As you can see, you're stuck in a wedge. So you don't want to be long or short until it breaks out one way or the other. UPS, this one you get ready to go short on a weaker open tomorrow. Today's bearish engulfing signal at the T-line showed you they weren't coming up through. So get ready to go short on this one on weakness. Baidu, same scenario. Probably on Baidu, I probably wouldn't be long or short. It's just turned into a junky, junky chart right now. AVEO, same scenario. I wouldn't be long or short on this one. Which direction are you going in? basically sideways. You don't really have any buy signals here. Boeing had been setting up as this J-hook type pattern. If you're long, you stay long as Boeing stays above the T-line. JD.com, stay long. J-hook pattern in progress. INSEE, stay long as it stays above the T-line. It closed right on the T-line yesterday. Hit the 200. You can still be a buyer of this one on positive trading. Now again, here's one of our made some good money over here on INSEE because it's coming out of a fry pan bottom. And where was it time to take profits? When they gapped up in the overbought condition and moved that far away from the T-line, that's when you flip to your 10-minute chart. AIMT, yes, you can get ready to go short on this one. First target would be to see if it uses this area as support, and then see what it does at that from that level. DVD, you can get ready to buy this one. Notice a little morning star type signal right off the 50. So if it supports at the 50, where do you think your next target is? The next resistance level everybody can see. AMD, all you can do here is stay long as it stays above the T-line. Wynn Resorts, still getting beat up. The fact that they gapped it down and they closed it below the T-line, I'm sorry, the 50, that was really of more downside, especially if they open it lower, breaking this level, making the 200 your next likely target. ExxonMobil, that's a kicker type signal with a booster. If this opens lower tomorrow, you definitely want to be out of it, maybe even short. It won't move around all that much, but it would be heading down. Weibo, another one that gapped down from yesterday or the previous day's open or close. Gap down below the previous day's open. If it opens lower tomorrow, you close it out because now you're in the prospect of having a very doji sandwich. Square, you just stay long as this stays above the T-line. DRNA, get ready to close this one. This one has to open positive and trade positive to stay in it. Kodak came back a little bit today, but not anything great. You should be out of this one with it coming back down below this level. You shouldn't be back in it until you see a strong buy signal taking you back up above the T-line. Optic, you can pretty much see there's nothing here. We already got the line right there. I wouldn't be buying this one until it breaks out to the upside. I wouldn't be long or short right now. Brazil, anytime you see a gap down and trading back below the previous day's open, especially in the overbought area, if this open lower tomorrow, take your profits. They're coming back down, at least down to the T-line. That gap down to the bottom of the previous day is telling you a weakness is coming in with a high degree of probability. Gold backed off today. So you definitely want to see this open positive if you're long, but I would have probably have closed it out today. Notice what's happened when they gapped it up in the overbought area. Remember, when they gap up in the overbought area, what's the first thing you start looking for? A sell signal. NRZ looks like it's failed. You could possibly be going short. Now, this is what I would call more of a blue ice failure, meaning they fell through the ice, they couldn't find the top, they came down, they came back up, couldn't find the hole they fell through. Look for it to hit for the 200-day moving average. And ETP, Hanging Man closed below the T-line. If you'd been long on this one, you should have been out today. Gold, is what happened to gold. There's your hanging man, lower open, and a close below the T line. If you were long, you should have been out of this one today. Now, bearish Harami. If it opens lower, you can take profits, but then just watch to see what it does at the T line. If it bounces up from there, you can buy it right back again. AEMD. Just make sure your volume is good. You can buy this one. That's kind of your bobble breakout. Hit the resistance level, pulled back to the T line. Oh, there's kind of your slow curve. Somebody was asking earlier, what's the definition of a slow curve? It's a little quick at a fry pan bottom. That almost fits into the realm of a slow curve. So when they curves, it's usually like a slingshot effect to the upside. Schlumberger, you should have closed this one out today. Had your bearish Harami confirmation, and then a close below the T line. Fastenal, looked a little bit squeamish here, selling off another one that probably I would wait to see if it trades below the T line, but I'd get ready. It needs to really show some strength tomorrow. And Grub, bearish Harami, right about the same level it topped out before. Stochastics rolling down. If this opens lower tomorrow, I'd close it out. It means they're coming back to test the T line. So even if they come back and test the T line, you've got the possibility of another setup, a J-hook pattern, but for the time being, you're going to be stuck back into the sideways trading. And VAX needs to open positive tomorrow. If it opens lower, watch the T line. ARDX. As long as it stays above the T line, you stay with it. But as you can see, it's just kind of creeping along. And Cassie, that one's got the little J-hook type pattern set up. That's more of your hammer doji, gap up, best friend. I'd be a buyer of this one on positive trading tomorrow. HMNY. Whoops, that one was getting set up nicely. It's kind of a little, you want to be buying this one on positive trading tomorrow. You've got the bobble breakout set up. We did NC. CMCM. Still stuck in the wedge. You can see the wedge. I'd be a buyer when it comes up through whatever this level is, about 1730 or so. But right now I wouldn't be long or short. If you are long, you can stay long as it stays above the T line, but you definitely don't want to see it close below the T line. I can't find the T line in my indicators to select. Victor, it's just putting in the 8 exponential moving average, just like you would put in the 50-day simple moving average. Facebook, still not a trader of this one. You can see where it's resisting. Oh. Pretty much right there. I wouldn't be long or short Facebook unless you're planning to hold it for a long term. It's just, to me, it's not a good trader at all. There's no chart patterns you can trade off of that. AKAM needs to break out, preferably about through that level. 8, you stay long on this one. Use this level right here as your stop. It shouldn't close back below this level. If it does, where are you? You're back in the congestion area. Zine, nothing great yet. I'd be more apt to go after this once it gets up through the 200. Baba, little cradle type pattern off the 50. You stay long on this. OMI. That one you can be buying. That's a good looking chart. Big fry pan bottom, little cup and handle. Next target, potentially the 200. And tech. Tech, nothing yet, but you do have a good pattern. So now you got to see whether you're in a fry pan bottom. If I was going to buy this one tomorrow, it'd have to come up through today's high. That would tell me I've got a much faster trajectory, a J-hook type pattern. Would you buy an obvious belt hold if it's way below the T-line or wait? I would buy a belt hold way below the T-line on positive confirmation. Because what would be your first target? Your first target would be the T-line. It's 2.8 seconds. Sometimes I give it 4.2 seconds. It's usually enough time for everybody to bang their requests in. And if it keeps scrolling, then every time I try to read a signal or a symbol, it keeps scrolling up, and I've got to chase after it on my scroll bar. EFT, that did not show up. EFX. That's why. Yeah, that's a good looking short. Got to observe the obvious. The E right here at the 200 and a close below the T line. Where's your next suspected target? Back here, which would equate to this area. Good one, Ralph. And 5. You can be going short on this one. I'd be more apt to go short on definite weakness down through the 50. Caterpillar, same scenario. Would want to see it on weakness though. Up, they're showing Corvettes on, what do they call that? Strange inheritances. I know there is a guy, I think he's in North Carolina, maybe South Carolina, that has a Corvette from every single year starting from 1953 when they first started making them. The only other qualifier is that they're all black on black. RENN, if you're short, you stay short. This is observe the obvious. If you've got a big move like this, got a huge profit, I usually take half of the profits off, then it needs to open positive. If it opens lower the next day, I close it out immediately. Because it's a high degree of probability that if they open it lower the next day, you want to be out. You definitely need to see the probabilities in your favor with it trading positive. TV, there's a long hammer signal. That tells you they wiped out a lot of sellers. So I would still be a buyer of this one on positive trading. TRVG, you got the fry pan bottom, you have the shooting star, but you also have the T-line. So if you're in a fry pan bottom, you stay long as it doesn't close below the T-line. Dust. You could buy this one. I'd buy it on positive trading tomorrow if it breaks this little downtrending channel. First target, second target, third target. NBEV, there's kind of your J-hook pattern. Kind of the opposite side of a bobble, because it came up through the 200, used the 200 as support. I'd be a buyer of this one, especially if it came up through this level, which looks like to be about 422. I'd buy it, probably about 422 or so. Yeah, you could be a buyer of this one. Schlumberger, yes, you can short this one. This would be your first target right here, which might coincide with the 34 by that time. HollyFrontier, you could also, yeah, Joel, you can use puts on this one. Now, what you have to be careful of, there's two things you can do to figure out where this might be going. First of all, you're getting into the oversold area, but you're breaking down. Next is you put your Fibonacci retracement number on here. Notice where it closed today or touched today. Right smack dab on the 38% retracement level. So that gives you at least the inclination to say, all right, I better watch to see what it does tomorrow. If it does a bullish Harami, what's that tell us? That the 38% retracement was the first target where everybody was starting to buy. Let's see, did we do CNCE? You can buy this one. Use today's open as your stop. And price line. Oh, price line. Whoops. You can see it closed below the T line. If you're long, it has to open positive. If it opens lower tomorrow, close out the trade. The 34 is an EMA, exponential moving average. DHO, get ready to short this one. There's your left-right combo, breaking out of this range. If it opens lower tomorrow, you can be shorting this one. Where's your expectation at that point? Well, first target would be right here. Second target would be the 200-day moving average. Okay. Guess we got most every one, so just be careful right now. This market's been obviously strong for the last 15 months, but there's nothing yet that tells us there's any major change of investor sentiment. That you'll probably be seeing some backing and filling. This one used today's low as a stop. If it comes back down through there, it's still above the T line, but more than likely it's going to come back and test the T line. Okay, with that, everybody, we'll see you bright and early tomorrow morning in the chat rooms. We'll see you then.